everyone. This is your dip alert for the week of April 27th. The stock market rally has been going up for the last 4 weeks, but it appears to be over. Now, I'm going to show you why and what I'm doing to protect myself and my loved ones, and I hope this information helps you and your loved ones, so please keep watching. Now, Friday, April 24th was positive for the stock market, but overall, it was a negative week. Just like this chart shows. You can view a chart either in daily view period or in weekly period view. Now, with the daily view, you see the daily action, but you also see the daily volatility. However, the weekly view gets rid of that daily volatility and shows whether it was a good week or a bad week. Now, in previous videos, I've talked about that in order for a market's momentum to keep going up, higher highs have to be created, meaning that each passing week or month period, we are making higher highs by achieving higher prices than the previous week's or month's close. Now, you can see here that when we go back in time a little bit and still in the weekly view, you can see the positive weeks and that generally the market was making higher highs. But the opposite is also true. If there is a correction, then the market makes lower highs and lower lows, or its prices start closing lower than the previous week's close. Now you can see that play out here with the crash. And now let's look at what happened since the low on March 23rd. We've been making higher highs. And here, let me zoom in. Again, we made this low on March 23rd, or the week of the 23rd, and even though the week of the 30th is red, a new high was hit, so that was positive. But we didn't make a lower low, so that's why it looks like it's neutral. But the market momentum kept going, and then two more higher highs, and then the week of 420 hit. And then the rally appears to halt momentum. Why? Again, because no higher highs were made. And timing wise, this is an omen. Now, unfortunately, this upcoming week, important U.S. economic reports are being released, and the Federal Reserve is also going to speak. Now, as you can see in the schedule, nothing big is happening on Monday, April 27th. I wouldn't be surprised if the market increases that day since no news is coming out, and that could set the stage for this next correction and drop from this higher level on Monday. Now, Tuesday, we should see home prices, how they're holding up from the Case-Shiller index. This could be the start of a big pullback because here comes Wednesday, April 29th, which is the big day when gross domestic product or GDP numbers are released and the world will get its first glimpse into the true economic impact that the coronavirus shutdown has had, and I expect the market to react negatively. A lot of analysts expect it to already be priced in. I'm not so sure here. And from there, if things go bad, it can escalate even worse on Thursday, April 30th, when job claim figures or unemployment figures are released as well. We've been hearing these figures of millions of people. Well, now we're going to know exactly how many. And if the market doesn't react well as I'm anticipating and we do drop below 22,000 points, that's going to be indicating that the week of April 27th would have created a lower low, which is not so good. And if we break below 21,800, well, the next support below that is about 21,000. And if we break that, there's no support until we test the low again of 18,300 that we hit back on March 23rd. Now, after that, the stock market may keep making lower lows into mid-May, and the worst case scenario is a 50% retracement from the February high of 29,551 down to 14,775. Again, that's the worst case. Now we just have to follow the numbers and see how we end the week and this month. It's crucial. We're also finishing a week and a month. Now I'm so confident that this is happening that I've taken proactive measures of getting out of my investments and going into either cash or bonds. Now, if you have a 401k or retirement account at work or your job, you can make changes really quickly and easily online. Now, I just want to show how easy it is to change the investments in your 401k or retirement savings if you have online access. If you don't have online access, contact your HR department and get your 401k administrator contact information so you can reach out and find out what your rebalancing options are. But if you do have online access, log in. And after the login, you're going to want to look at your menu options and look for something related to your retirement savings. And once you find that, you click on that. And as you can see, this account belongs to a family member that I've been helping achieve the best returns through Northrop Grumman's 401k options. This account, as you can see, is currently weighted 100% in stocks or equities. Typically, most 401k administrators limit your options on what you can invest in. It's basically funds that follow stocks and bonds, and those funds are weighted differently based on those stocks and bonds. Stock and bonds. Now, given that I follow cycles and have been saying the stock market is going to 40,000 points, I had this family member, balance their retirement account heavily in stocks, or in this case, 100% stocks, especially since bonds are yielding low returns with interest rates being so low right now. Now, again, one of the specific advantages for this client is that they work at Northrop Grumman, so they were able and have the ability to invest in their company stock, which they have taken advantage of by weighing their portfolio heavy in Northrop stock. I'll explain why that's a huge advantage coming up here or in another video. But let's look here, scroll down, and let's look at this account year to date. As you open this up, you can see that as of January 1st, 2020, this balance was about $351,000. And even with all the negative turmoil, it's only down about $12,000. Not shabby or, for where it's at, because ultimately, if you look for, from Friday, April 24th to the beginning of the year, this portfolio is only down about 3.47%. Now, this is the benefit and advantage of taking advantage of the cycles. And what I'm trying to show people is proactively structuring your portfolio to limit losses or even set it up for a quick recovery. And again, like I was mentioning, 401ks are limited, but in this specific case, being able to invest in Northrop Grumman was huge. Now, again, you're going to want to go over to investments so we can get an idea of what options are available and how limited you are. Here's the balance overview again and showing the split in assets. Again, about 77% to Northrop, 23% to US equities or the overall stock market. Again, you can see about 20 investment options, and you can see that they're basically blended funds split between stocks and bonds. You can see their names. Again, the asset class is blended funds. And under the core investments is where I have this family invested. Again, you can see Northrop in US equities, Northrop is company stock, and the US equity invests pretty much in large caps. And if you actually go up here and look at the 1 year and the 10-year returns, you can see that the 1 year return for Northrop is up 12% and 16% for the 10-year return. The US equity fund is down 7% for the year, but up 10.5% for the 10-year return. So this family member has been invested 100% in stocks based on the cycle and economic situation. And now, with stocks about to correct again, we're going to be moving the retirement funds to bonds. Now, even though US equities are down, right now 7% and Northrop is up 12% for the year, the recent stock market crash still took down Northrop Grumman stock. Let's look at the difference in the rebound. Now, the Dow Jones looks again like it's about to drop there. You can see it rallied, but barely even made it and touched the 50-day moving average. Versus if you look up Northrop, which ticker is NOC, you can see that Northrop stock price broke through its 50-day moving average and it even broke through its 200-day moving average. If you compare its drop in price, from about or 380 to 339 where it's at right now, and if you do the math, 380 minus 339, you get 41, and if you divide that by 380 where the stock market price was, it's only about a 10%, 11% drop in price. But if you look at the stock market, the Dow Jones all-time high was 29,551 achieved in February 2020. So that's about the same time period when Northrop stock was at 380. And if you do the math, 29,551 minus where the stock market ended Friday, you can see the date is here, Friday, April 24th. The stock market closed at 23,775. So enter 23,775, and you divide that by 29,551 high, you can see that the market is still down 20%. Northrop stock is down, what was it, 11%. Um, that's a big difference. So even though the stock market price dropped, it rebounded quicker and to a higher level than the Dow. So even though Northrop stock rebounded quicker, you can see it still crashed. So it's to avoid this next downturn and avoid, any further losses, we're going to rebalance this portfolio and take advantage of the U.S. Fixed income fund down here, especially since it's up 9% for the year. And when there's a panic in stock markets, there's always a flight to safety, which is U.S. Treasury bonds. And if you actually come up here and look up ETFs that track Treasury bonds, you can see that their stock prices had the opposite effect. They went up when the stock market crashed. Again, when there is a panic in stock market, there's always a flight to safety, which is U.S. Treasury bonds. So to avoid any, further losses here in the drop in the market into May, we're going to rebalance this portfolio from stocks to bonds. So look for a link that says up here, change investments, or whatever your system requires related to changing investments. You'll get some options in here. You'll see, that this account, since we have multiple investments, we're going to be selecting exchange multiple investments, and then you're just going to want to continue to start the rebalance. And with this specific account, though, we can see that there's already pending rebalance. I recorded this video after I had my family member rebalance their portfolio on Friday, April 24th, and I wanted the transaction initiated, so you can see that there's already a confirmation number. And since the rebalance was initiated Friday the 24th, the actual transaction won't take place until Monday, April 27th. Now, to recap, this portfolio was 100% in stocks and was just rebalanced to 100% bonds to avoid any losses during this next downturn, and instead make sure that the investments stay flat, which is better than doing nothing and risking your wealth into the whims of the market. That's the advantage of my dip alerts, my research, and my commentary. As you can see, not only do I confidently and strongly believe in my research and what I've been saying, that my family member does as well, because they're trusting me to go ahead and rebalance 350,000 of their dollars. Now, that's their retirement accounts and it's going to bonds and it's going to do okay. But what am I going to do for myself? And what am I going to do outside of my retirement accounts is I'm going to speculate for my own account for myself. Now, typically when stocks go down, bond prices go up. The problem with bonds is that their yields are low. So you're better off in cash because you want to stay liquid to buy the dip in stocks. What I'm going to speculate is in the VIX. Now, the VIX is the volatility index, and it measures volatility. And with a stock market crash, you can see volatility shot up, right? It's a pretty volatile period. Now, the VIX more than quintupled, as you can see. And I don't even know if I said that correctly, but it basically went up and it increased about 5.6 times its original price from $15 a stock to $85. Coincidentally, as the stock market has been rallying and volatility has dissipated, the VIX is down. Now, I'm not putting all my money, but I am going to invest in the VIX on Monday, April 27th, when the market opens. Again, it's my play money, not my serious investment money. And since I believe the stock market will test the low of 18,300, I believe the VIX will rally back and double to 85 points. But that's me though, and that's what I'm going to do. And realistically, not much, but I am going to do that just to illustrate the possibilities and have that on record. Now, I have friends and family that are going to bonds because they can't go into cash, just like that family member in their Northrop account. And I have friends and family that are, you know, gonna stay in either, bonds and cash, and really stay in cash because they're ready to buy the dip. But regardless of which you choose, at least you've been alerted.